Good morning, everyone. It's Monday, time for the Monday market analysis, like every week around this time, and it's promising to be an interesting week to come. After a green weekend in Bitcoin, we now see some downwards move, and let's dive into that. Quickly overview. Europe is around zero. It was higher before, but it's now turning around, probably because US pre-market is looking to dip into the red. There's a big week in the market. Oil still pulling back, gold still pulling back, bonds having a bit of a pullback quickly, and obviously Bitcoin and Ethereum are quite deeply in the red already. So for the headlines, obviously the normal, by this time, geopolitical situations that is still heating up, but also supply chain issues, and another interesting one, that China built a private blockchain service network, whatever they call it. So interesting developments in the market, but nothing really specifically to crypto. Obviously, Chinese economical data slowing down. A lot of retail earnings. We'll take a look at that. So plenty happening there. On the calendar, we have retail sales on Tuesday. That could be a bit more disappointing than expected, in my opinion. And we have the Powell speech in the Tuesday evening. So keep an eye out for that one for sure. For the rest, it's a bit of a consumer week. We got building permits coming up, housing starts, jobless claims, and home sales. So this week seems to be a bit focused on consumer and their behavior. And last week we had the Michigan consumer sentiment turning out worse than expected by the market. And as I said last Monday, I expected it to be a bit worse. And we had an instant red candle exactly when that came out in Bitcoin. So 100% correlated there. If we look at those earnings for this week, and this is filtered by large caps, we got the Walmart, the Home Depot, all those consumer spending earnings really much. On the mid cap range, if it loads during the stream, there are also some more consumer related earnings in the horizon. So combine that with the worse than expected consumer sentiment last week, it's definitely putting some downwards pressure on the market. So let's switch to the charts. Just finding the right share there. If it will load today. Come on. Sometimes it's a problem because the Bitcoin price changes the title, and that prevents the stream software from capturing it. So it is a hard time today. There's always something when you stream, always something that... There we go, finally got it, bit of a trick. So when we dive into charts, we see DXY last week had a pump and a bit of a retrace at the 618 fib extension, and might float around sideways before going for the next leg up is the expectation there. So no end in sight in this move up. It's often one or two candles in the red before continuing the legs up. and everything pretty much points to that. We do have a count 8 here, so we might have some sideways action in the coming days. Hopefully that relieves some of the downward pressure on markets and crypto. If we look at the Nasdaq correlation, we're still very highly correlated, around 93% on the correlation index. So sadly, we have not been pulling away from that stock markets. If we look at gold, it's in a very important support zone. On the daily, we see that the indicators are starting to turn around. There's a bit of sideways movement, I think, this week, but it's definitely at entry levels. That 1800 level around between 1780 and 1800 is definitely a buying level. We also have a bullish harmonic, two of them even aligning with these price levels. So let the TD sequential setup continue towards an 8-9. So that would be Thursday probably. And let's see if we can get some price confirmation here. It should be a very interesting entry for gold this week. Bitcoin, we'll dive into that in more detail in other charts. BTC dominance went up again, aka the altcoins have been dropping much worse than Bitcoin in this case. It looks like a bit of a pullback. Also count 8 on the sequential daily. And we might get a bit of a pullback sideways action before I expect it to continue upwards. Maybe a small relief rally could let the alts run a bit. And we've seen in the past days that if there's a bit of upwards action on Bitcoin, we see a lot of alts go into double-digit profits. Ethereum to Bitcoin took a plunge with the other altcoins, and Ethereum is now just above the 2K mark, so that will definitely be an interesting level. Hopefully we can still make a higher low here. Well, positions, we see that a lot of shorts have been closed, and we see the longs stabilizing, but they had a pretty good increase. Let's see where it started. At 6 May, from 6 May to now, there's a 80% increase in long positions on Bitfinex. So it looks like the whales are starting to build up their longs. Keep in mind they will easily DCA that to 20k, 17k Bitcoin levels, and while still increasing those longs. But it does mean that upward pressure is building. The downside is if Bitcoin takes a drop, they might have to liquidate, and that might induce a liquidation dump, but we're still far from those levels. But interesting to look at anyway. Total market cap, we did hit that 1.2 trillion like I predicted in last week's MMA. That was not a big surprise after this price action and that rejection here. So if we see we are at critical support here at the 618 retrace, that has been support. If we really fall below that 1 trillion, then there will be pretty much a slaughterhouse, and we'll probably go to 800-ish a market cap. Not the best forecast there. Quick look at the stock markets. The pre-market is trying to flip into the green by the looks of it. Europe is also flipping green, so we might get a nice rally up on those. Don't expect it to break this downwards trend line though, but still, if you look at the Nasdaq, that is probably 1.2% upwards potential before pulling further back. And the Fed speech could definitely be the point where people are waiting for, so we might have some sideways small price action in today, tomorrow. For the rest, we are at entry levels, but yeah, with the whole macroeconomics, it's hard to say in what level it will play out. It did already play out on Friday, you could argue. So let's see if we get a type 1 or type 2 return on these harmonics, what would imply more upside potential. And then we switch to some other charts. Let's see if I can find the right one. There we go. So if I switch to a chart that I don't often show on my stream because it's pretty complex to show, what I am looking at is the three names to rule them all. I'm looking at dmark indicators, I'm looking at Elliott waves, and I'm looking at Fibonacci levels on higher time frames. And this is the more expanded setup for TD sequential that has set up and the countdowns. And you see that we have, let's get a brush out. We have on the standard countdown, we had the 13, and on the conservative countdown we also had a 13, and we are getting that upwards move from there. So TD sequential countdown wise, we are looking for a leg up, and also on the setup count 8 we are in the potential reverse zone. Keep in mind this on the daily, so it's quite a long range where it can interact in. On the dmark RAI oscillators, we don't have any buy signals yet. This is on the standard mode and the alternate mode as suggested by Tom dmark. This is the dmarker indicator that also shows very low levels. We even hit 1.11, I think. So that's pretty low. We didn't go that low since, let's see, January 22, but you can see there was some more downward action after that with another dip in the oversold territories. And dmark also says you're looking for a dip in low levels and then pull back to the midline towards the 50, and then you get your confirmation low there. That's usually lower. So perfectly aligns with the chart here. So that's also based on this one. What we can expect is maybe a bit of a rally before pulling back further and to the exact levels we'll see in the next chart. And that would paint the pullback to 50 probably, and making the confirmation low on the demarker indicator. Now we're getting a bit complex, and I'm gonna try to walk you through it. So this is the daily chart where I draw a Fibonacci from the March 20 low to the November 21 high. And as you can see, we have that golden ratio here, the Fibonacci 618, 0.65 that we hit in the current price level finally. We did have a bounce from the 0.5, had a pullback and then went down. If we look at Fibonacci extension levels, that's this little colored bar here, then the deep pullback would bring us somewhere between 19.8k and 16k on the lowest. I don't expect that one to hit, but if we look at the retracement, we do see that 17.8 is a likely deep pullback for Bitcoin, even a quite common retrace level. So having those zones identified, and we might as well actually draw a zone of that. This is, in my opinion, the absolute bottom. Now that's just one method, or actually two methods of Fibonacci. Then we will switch to another famous name, Mr. Elliot. Made his wave theory in the 70s, and I am using the dmark implementation of Elliott waves, where Elliott waves are very there's a joke in Traderland: if you put 10 Elliott wave experts in one room, you get 10 different charts with 10 different waves. And dmark made very strict framework how to put your wave levels, and I'm using a bit of his method, a bit of my own. So I'm looking at to predict the next moves. So we're in a bearish market. You got your 1, 2, 3, 4, 5. 5 is the dip that's currently painting, but keep in mind, I don't think this is deep enough. If price continues to fall down, that 5 could just move to the next pivot point. And if you look at the ratios between those waves, it's very common for that 5 bottom to be around that 786 retrace. Also, if you look at other indexes on higher time frames. So this is where it gets a bit more tricky. We have that Fibonacci here, that is from this one to that one. Then we can count for the A, the retrace levels to be around the Fibonacci golden pocket. So this would here, let me just add some text there. So this would be your A right here. Then if we take a Fibonacci on the A, and that's now just a prediction, obviously we need to paint that 5 before we can get the definite level of A, and we need the definite level of A before we can paint the definite level of B, but this is a guesstimate with the current data. So when we take a Fibonacci on that 5 to A level, then the next leg, the B, would be also most commonly at the 618 retrace of that leg. So that A would be around 37k, but the 5 point I think would be exactly in the middle of that zone. So probably around 18k price level. Then we should get a relief rally to 37k ish, and then another pullback to 25k before making that C move that doesn't have really a target level. You can't really move it slightly upwards. So this is, in my opinion, a very likely scenario based on statistics, based on these dmark implementation of Elliott waves on the Fibonacci's in the current market conditions. Keep in mind, waves can break, they can reset, market conditions can change, but looking at the macroeconomics and the whole geopolitical situation between Ukraine and Russia, looking at supply chain issues in the market, looking at all the tensions and all the food scarcity that is building, I think a lot of investors are hedging, and I think a lot of retail investors have enough challenges to pay for their petrol, for their energy, for their food. So I don't think there's a lot of buying to be expected in those coming months. And this could very well take 1 to 2 years to develop. So I don't say this will happen. We can definitely bounce here from the 30k. A lot of buy orders came in. We can get some positive economic news, or the Fed will intervene in some way, and that could just make 30k the bottom from where we spring back upwards. But those are, it's a forecast based on pretty much my worst case scenario, looking at the current market conditions. Not the best look, but yeah, you have to be prepared as a trader. You have to be prepared for the best scenario where we bounce from 30k, start making trending higher lows and go towards those all-time highs. But you also have to be prepared for the worst case scenario where we pull back to 18 to 20k, and we'll see from there how the world looks. So you have to be successful trader. As a successful trader, you have to be direction agnostic. No matter how I believe that Bitcoin is the future and blockchain is the future and it will not go away, will definitely not go to zero, you have to be realistic that if you look at markets, these things happen. You know, we have stocks now that dropped 94%. We have very big tech companies that dropped 30-40% already, and I don't think we had the end of it. So worst case scenario, keep it in mind if you trade that this could very well happen. Looking at some other charts, we have the theorizing on that worst case scenario. I did some analysis on this one. We see exactly here, we saw a small blue oversold area with a rally and then the final low. We are now also getting the first blue oversold area, and if I copy that chart pattern, you see that we might get a bit of a rally to 33k, 35k maybe, before pulling back to $1,800, $2,000, $20,000, not 2,000, thank God, 18k, 20k levels, just copying this fractalish chart bar patterns. And that would probably mean that somewhere in the summer holiday, July, August, obviously the slow month of trading, that we will get the definite lows. I do think that in September, from September on, we might trickle back up again. Keeping this in mind, that might mean that we will then be in the end of 2022, we will move from the 5 to the A before having a pullback in beginning of 23 before the final recovery can set in. So those charts really align pretty well on those time frames. I don't know if it will load, but see if we can get the hash ribbons in. We did have a bit of a dip in the hash rates in April, but that recovered. We don't have any minor capitulation on the horizon, so we don't have any clues from that one. Where is the chart I'm looking for? This is the chart I was looking for. Switching down time frames to the 4-hour, we see we did overshoot that support zone all the way to 25k. We got a very quick push back up and we're now back in that support resistance zone. These gun lines proved to be perfectly aligned. There was a lot of gun lines here from previous peaks, and we're now in that zone. And yeah, the question is, will we break up above 30.5 or will we break down below the 28k? And not in a fake out like this. If you look at the volume, this was pretty pathetic volume. You really want to see that move up, backtest, and then volume supported bounce in either direction for a higher time frame position trade, where you enter, you have your break, your hook back, and your go, and you enter on the go when it exceeds the hook back initial momentum, if there's good volume in this whole move. So looking back down, on this chart there's nothing painted below current levels. There's also a big gap in the Fibonacci gun lines here. So I'll have to still update it to paint the Gans here. I'll do that this week. So next week, because it does seem like a definite pivot here, next week we'll have some updated charts on that. So shorter time frame, we wait what happens in this zone of trading. Switching to, not that one yet, 1 hour trading time frame. We see that last week's volume profile here, the point of control, is providing some support now. It's at 29.5-ish, 29.4, say pretty much 29.5k. So it's providing some support. If we break below that with a candle close, then I think we will get a fast action down. We do have potential reverse zone here on the 1 hour, so would not surprise me to get some zigzag sideways accumulation until tomorrow, where the more economical news and the Fed speech and everything is coming out. So don't expect really big bounce here, but it pretty much depends on these folks at the stock market there. So that's, don't think we get many big moves today until the more data of the stock market and direction is being picked there. So definitely swing tradable. These are this. Let's see what that range is. 2% range pretty much. Might even a bit more. Like that's the middle of that support zone that we currently are. Looking at the indicators, trend strength on trend profit is being overbought, is quite high still, so there is some sideways action to be expected. Price confirmation is still pointing downwards. Trend momentum is downwards, but we do have some signs that this might be a pivot point. Those exclamation marks usually pick tops and bottoms quite well. Here it picked the top. We did have one on previous candle, so it's hard to say in the sideways action if that was a top or a bottom. If it was a bottom, I would expect it here. So I think this was a bottom sign for some downward sideways movement like we had here in this period. Price action has been slowing down. We do see, and that's interesting, I think, if I look at the true money flow indicator, that you do see lately in the last weeks some small bumps to the upside, and then as soon as it crosses the zero we continue down. Small bump to the upside, continuation down, bump to the upside, buff, and as soon as it dropped, it just kept dropping and the money kept flowing out of this market. Now we do have some upside, small upside bumps that are decreasing in strength. Now if we zoom in a bit, you do see that the moving average is already crossing down the zero. So looking at this chart, does suggest some downside sideways movement. So looking for that steep correction to the downside where money is flowing out of the asset there. And you see as soon as it crosses zero, it might go sideways until you get a steep drop. Interesting to follow the money in the trades. I think that was everything I had in my planning for today. Just showing one thing. It's still in private release, being tested. The Trend Master, the idea is to have a multi-time frame view of sideways trending indicators aggregated different time frames, and the main purpose is to automate scalping bots. So you put this on, for instance, a 1 hour time frame, and it will tell you when to start your short bots and when to start your long bots. Integrated TD sequential, RSI, moving average, smooth and high Fibonacci, choppiness index, SL channels, ATR, ADX, EMA, PSAR and the envelope are all integrated here, and you can say how many indicators need to be trending before the total score is trending, etc, etc. So very interesting to compare this to the price action. Obviously trend indicators are always a bit behind the price action, so but in the brief looks these green zones overlap the price action perfectly, and there are the dark uncolored backgrounds are picking the sideways actions very nicely. And you can, depending on your bots, you can say that you need more indicators to point it to the same direction before you will start your bots there. So it will be released hopefully this week after the final tests has been conducted, and if it's released I will do a stream about it. Alright, well, stay safe this week, both in trading and in the real world. I know we have some people watching from Eastern Europe, that's pretty close to the action there. So stay safe out there, stay safe with trading, and always keep both directions in mind. Thanks for watching, and I'll see you later.